the swing VIX, so we have a lot more downside to go before we hit a negative 39 reading. So, you know, the bottom, there's no bottom in sight is what I'm saying. Okay, the last signal that was generated was an overbought sell 51 periods ago. Since the swing VIX crossed its moving average, the gold miners ETF price has increased 0.08%, and it's ranged from a high of 53.17 to a low of 51.42. The market trend remains very bullish. Trend momentum is also very bullish because we're trading above the long-term, intermediate, and short-term moving averages. And the trend strength is in a bullish consolidation. So even though we're bullish, looking long-term and intermediate, on the short term, we're in a consolidation. What that means is we still are bullish as we are trading above the Kumo cloud here. All right, and this is a bullish Kumo cloud, but we're not trending, right? Because we have not put in new highs. Do you understand? This is the range here. All right, this here is the top or the resistance. This here is the support. We're trading within the highs and the lows, so that's a consolidation. We're not really going anywhere. Does that make sense? Not saying you can't make money. You can't get in and out, because you can. I'll explain that in a second. But we're going nowhere, okay? Now, as far as volatility, the gold miners closed below the upper volatility band by 27.8%. And finishing out the analysis, we have no recommended entry points for Friday. Our intraday price projections are as follows. We project resistance to be at 52.81 and support to be at 52.19. We're going to watch for possible trend reversal breakout shorts with a close below 49.80. We'll also watch for a possible explosive continuation breakout rally with a close above 54.39. In other words, the thing that you really need to watch for today, and I mean really watch for, is when you're closer to one of those watches. In other words, we're watching for the explosiveness of 54.39. Well, we're quite a ways from that based on the close of 52.18, right? And then you look at the possible trend reversal, meaning that what is the chances that this thing turns around and sells off hard? Well, that's at 49.80, okay? So we're kind of right in between the two. So you're going to need to watch that. I would even venture to say, when we don't have recommended entry points, you can, in good conscience, place orders at both of those extremes, okay? And that's a practice I commonly do to catch the breakout or breakdowns, because you just don't know what can happen. That way, if any news or any uncertainty happens, you're in the market and you catch it, okay? So what that means is, since we're going to watch for trend reversals to the downside, we would actually go in and we'll put a working order at 49.80. If it's not filled on the close, you cancel the ticket. We'll also put in a buy to go long at 54.39. If it's not filled, you just close it. And that's how we do that. All right. So that's how you use Pandora. When you don't have recommended entry points, but you have price projections that we're watching for, those are what we call acceleration points. If prices get to one of those extremes, there is a strong likelihood on an intraday basis that you will be able to pick up some money. Even if it reverses by the end of the day, you can still have moved your stop and locked in some money, if that makes sense to you. Okay. Now let me explain to you some of what these nice colorful things are. All right. As you can see here, starting with the ADX. All right. The ADX here is showing you where there are potential turning points in the, how can I say this, in the trading volume or momentum. When you get into market depth and you see the battle lines that are being drawn between buyers and sellers, and you see the bid and the asks coming in and the spreads and things like that, you can take a differential and come up with a way to read that, what we used to call reading the tape. So this ADX is not a traditional ADX in that sense. It's an algorithm that I can't put up with to show possible turning points. As you can see here, the first sign of the ADX here is pointing to a support, saying that based on this day, on May 5th, we put in a floor of support in this gold miners. And then the following day, we got a confirmation and we put in a resistance on May the 6th, that fateful day, right? So if you look at the support of 47.89 and the resistance of 50.50, it's letting you know you're going to watch for the following day for a breakout or breakdown of either that support or that resistance, and then that's the way you're going to go. All right? Sometimes nothing happens, like on this following day, on the 7th, nothing happened, okay? And then the next day after that, nothing happened. It wasn't until we got an explosion the following day on May the 11th that confirmed that. But this was letting you know that the market was getting ready to break out of a consolidation. Okay, so that's how that works. Now, on that day, you would have gotten, daily recommendations on what we want to look for and how to get in there. So when this thing exploded on May the 11th, you would have caught that explosion. All right, and this arrow here is showing you that this is a confirmation that the resistance area here was broken out, and this is what we call a first pulse wave. We have first and second pulse waves, and sometimes they overlap. I know it sounds technical, but looking at a chart can only tell you but so much. You have to have a mechanism in place that takes the raw data and breaks it down to things that you cannot see with the naked eye. All right, and that's what we do here. And then you see this little green symbol here that also lets you know when markets are breaking down, accelerating. All these little things here mean something, and as the days go by, when we get them, I explain them and I'll tell you what those mean. So hang in there and be encouraged. And that's all we have now for gold and silver. Stay tuned for the next segments as we cover the stock indexes and Forex and some other things. Thanks for listening and be encouraged.